going to Rushanara, please.
Good afternoon. I'm going to just pick up a couple of questions on Brexit before I go on to unemployment and scarring effects. So, Governor, you've already talked about deal versus no deal. Can you just say what you make of the LSE analysis that suggests that the long-term economic hit will be 2 to 3 times as large as the COVID impact as set out by the Bank of England's forecast? Would you say, and then that would put it on a par with the 2018 numbers that the government's analysis suggests, is it all slightly above that, around 8%?
Well, I think the long-term effect would be larger than the long-term effect of COVID. Now, of course, by the way, I should say, and we may come on to the longer, you're going to come on to COVID and scarring, I think, as you mentioned, that of course both are highly uncertain.
Yeah.
I'm at the rather more optimistic end on the COVID front, and actually we are collectively relative to, say, the IMF. I think, therefore, there is reason to believe that in the event of as you say, of a no deal outcome.
It was a question of him adding
the models
to a list. He did so after that, and it was all fine.
Sorry to interrupt. Yeah, I think Kenneth, you might have your microphone on. I might be wrong. I apologise if it's not you. Yeah, thank you. Sorry.
No, don't worry. So the models, just saying, I think you quoted the LSE model. The models would suggest that the longer term effects of a WTO no deal trade agreement are longer term. And the reason for that, I think, and this is pretty well established in the literature, is that it takes a much longer period of time for what I might call the real side of the economy to adjust to the change in openness and to the change in the profile of trade. I mean, I remember going right back in time to when we worked on if you remember the long time ago, the 5 tests on whether it sounds like ancient history now. The 5 tests on whether the UK should join the euro area, believe it or not. And one of the things we developed in the banker model to work with the Treasury on that, and what it basically said was that, over a long period of time, so you could be talking 30, 40 years, you will eventually get convergence because the real side of the economy will adapt. You're going to change an activity of the economy, but it takes a long time. So it's hard to put a multiple on it, as you say, but I think you're basically right to say that in that scenario, you would expect a longer term effect from trade, from the exit trade agreement.
So just following on from that, I'm assuming sleeping at night is a bit of a challenge, both for you and the Prime Minister, if the prospect of no deal.
But no, I'm Prime Minister.
As the prospect of no deal looms, with an 8% loss at GDP, which you've just, if as you have said, the LSE model is visibly accurate, that's really worrying. So therefore, it's in our interest to get a deal. So how do you see, in terms of you were talking about implementation earlier, is there a case for, given the lack of preparedness, which we've seen in one of the sessions we've had, with businesses showing huge amounts of frustration and anger, which spilled out in reports over the last few days as well as previously, and not being able to prepare, plus the COVID pandemic and the second wave, is there a case, even if there is some sort of deal, and we're not expecting a completely frictionless deal with all this disruption, for a period for implementation because of the lack of preparedness? You mentioned, you touched on it earlier. Could you just confirm what your thoughts are on how we make that happen?
Well, first of all, you're right to say that there is no such thing as a frictionless deal, because obviously we're leaving the customs union, we're leaving the single market. So anything hereafter involves change, let me put it that way. We're not involved in negotiating trade agreements. I can't comment on that. And obviously I also, as a public official, very studiously, I don't take a position on the substance of Brexit. But you're right. I mean, let me say, I've said a number of times, and many times actually, and I'll say it again, that I think, it is in the best interest of both sides, so both the UK and the EU, for there to be a trade agreement.
Yep.
And for that trade agreement to have, as I was just saying earlier, a strong element of goodwill around it in terms of how it's implemented. I think there's no question about that. In terms of my sleepless nights, which fortunately I don't have actually, but anyway, I mean, COVID obviously is a much bigger impact at the moment in the short run. But for all the reasons that you've given and we've just discussed. It would be better to have a trade deal, yes, no question about that.
Okay, so moving on to COVID, in terms of the vaccine, which the unemployment forecasts came before then, is the bank factoring in some of the kind of hiccups we get in terms of, for instance, on testing and tracing? The fact that we didn't have that in place adequately has meant where we increased our likelihood of facing a second wave, and therefore the economic knock-on effect. Andy Haldane's prediction of a V-shaped recovery looked very much the case until we ended up in the second wave, and so that process of the response is undermining the economic recovery. Plus, of course, is the bank thinking about whether there are mutations and new variants of COVID going into the future, and how we make ourselves more resilient to coping with those sorts of threats? Sorry to sound like, prophet of doom, but just in terms of thinking about how we prepare and anticipate, so that we're not going back and forth, because it's so frustrating for businesses, of course, but also those who face the spectrum of unemployment, who've already faced unemployment. Yeah,
well, I think obviously, going back to the answer to the previous question, obviously we do need to see, further, in a sense, evidence on manufacturing and distribution, and I think it's obviously well established that the Pfizer vaccine is more challenging on that front than the Oxford vaccine in terms of the temperature issues, which I think affect certainly the distribution of it. So we do need to see, obviously, that evidence, and we'll be following that very, very closely. And that's why, as Andy and others were saying earlier, it's we will remain obviously very watchful of how this timeline maps out against the timeline we've already got in the forecast, which goes across really next year. I'm not an expert on mutating viruses. I have talked to people. I think the interesting point here, and I can't offer you any view on it, but I'll state the issue. If it does mutate, I was certainly told this in the context of the mink issue. Of course, the question then is the mutation within the scope of the viruses that are, the vaccines, within the scope of the vaccines that are being developed, or does it take it outside the scope of the vaccines that are being developed? I think one thing that the experts, and I'm not one, have said to me is that I think it does point to the need to build on what terrific work that's been done this year to maintain that capacity to develop vaccines ideally as rapidly as they have been. Because if you remember back a few months ago, and certainly in the early days of this year, we were being told that vaccines take, several years and sometimes never happen, of course. So if you think back to that, this is terrific news. But I think that is certainly something that experts, I'm not one, have said to me, which is it does indicate that globally we have to maintain the capacity to do this work.
Would perhaps others could come in? I just wondered whether there is a case for new ways of thinking about scenario planning and analysis with the kind of latter point in mind, so that the bank is factoring in, as you're doing with other risk issues, factoring in these, climate wasn't on the agenda in the way it is.
Indeed.
It's now.
Well, I think that interestingly goes back to the point Silvana was making earlier about this new area of modelling, this epi-macro modelling, which I have to confess Silvana is umpteen times more expert on than I am. But I think what that is trying to do is say, how do you actually start to sort of, in a sense, link together macroeconomic modelling with epidemiological modelling? It is interesting when certainly when I talk to epidemiologists, there is quite a lot of common ground in terms of the sort of the challenges we wrestle with in terms of modelling. So I think you're right. That's it is a very interesting area of development. As we said to the chair earlier, we'll certainly send you something which summarises the sort of what we understand about that work to date. But it is moving along very rapidly, I would say.
Brilliant. Thank you, Governor. I've got a final couple of questions which I'll just do in one go for others to come in on, and this is in relation to the furlough scheme. And obviously that's been extended. And earlier on, Andy Haldane talked about the uncertainties around business and preparedness and so on. What can we learn from sort of ensuring that the support schemes that are in place don't kind of end up being truncated and actually damaged the wider economic outlook and employment. And then linked to this is the point about structural unemployment. Would you say, I mean, the analysis seems to suggest that there won't be, but when you take youth unemployment, you know, expected to be at 1 million, would you say that we need we need to think about it in a more segmented way and better targeted intervention, not just Kickstart, which is the short term, you know, it's only for 6 months, to address that particular aspect, or other forms of unemployment and structural impacts on certain groups? Perhaps Andy and then others.
I don't mind having first go. Rushanara, just on my prediction of a V, of course, I never did quite predict a V, did I? I described the economy as recovering in a V-type fashion, but I didn't predict it was going to keep on along that path.
I was giving you, or perhaps I shouldn't have given you as much credit then as I did.
Well, my one line, I only ever uttered one line on this, which was so far, so V, and the so far was a backward-looking part. Just a small point of clarification. I mean, to your points, I do think the extension of the furlough scheme and the increased generosity of the furlough scheme relative to the job support scheme has been a real positive, both extending the period of insurance and making slightly more generous that insurance. I think it's good news for workers in terms of their lessening their degree of uncertainty and boosting their incomes, and has also been good news for businesses too, in providing them with a degree of assurance. And I hope and expect that degree of assurance and insurance would remain in place as long as the risks remain elevated. Certainly, those are all the indications the Chancellor has given. To your point on youth unemployment, you know, nothing weighs with me more heavily than that issue right now. We know that recessions hit hardest those that are youngest and those with fewer skills, and this one very much will be the rule rather than the exception on that front. We know the losses of income for young people that flow from entering the world of work in times like this can last for years, if not decades. So without going on to the specifics of schemes, I do think that is rightly a focus of policy attention to mitigate as far as possible those scarring effects, where the scars are plainly deepest and longest lived among younger people.
Thank you. Would anyone else like to come in? I'm conscious that my time's pretty much up. Michael.
Thanks. Yeah, I am worried about the hangovers from the pandemic, even if and when an effective vaccine is widely rolled out. There's the effects on the labour market, and we have already seen quite a sharp drop in employment among the 18 to 24-year-olds. We've got the prospect for a more significant rise in unemployment across the whole population in the spring. And there's also been a big rise in corporate debt. Corporate debt now is significantly higher than it was in previous years. And many households also have seen their savings depleted. Of course, the overall household savings rate has gone up. That's really concentrated at the top end of the income scale. At the bottom end of the income scale, many more households have seen their incomes weaken and their savings fall. And so we'll come out of this pandemic in a worse financial position. And I also worry about scarring effects on demand through risk aversion. I think until this year, the idea that the economy might suddenly fall 20% was unthinkable. It was not something that firms would factor into their planning. And having gone through this experience, I think that firms will look to have greater resilience in their balance sheets. They will be more cautious over borrowing, want to hold higher stocks of liquid assets than they did going into the pandemic. And that's likely to be reflected in greater caution over risk-taking, investment and hiring. So those aren't really, I mean, obviously it's better to have a vaccine than not, but those are hangovers from the pandemic, even as and when there is an effective vaccine, which I suspect will weigh on the economy for some time.
Silvana, on any of these points, or earlier on when we talked about resilience, if you wanted to come in quickly.
Yeah, I mean, I agree with Michael. I'm particularly concerned on the effects on employment and income, which I think will keep dragging on the economy, even when the direct effects of the virus fade thanks to the vaccine. So I am concerned about these longer lasting effects. The extent of scarring, in some sense, it depends on the policy response. So the supportive policies that help bridge across this period will reduce those scarring effects and help avoid unnecessary business failures, defaults, and help support cash flows. So I think there is a strong role for policy to play here in bridging across this period. And with the confidence in the vaccine, we can do that more forcefully. So in some sense, what I'm saying is that the scarring effects are not written on stone. They can be affected by policy, and we should be acting to avoid them. Given that most of the businesses that were viable before should be viable post-vaccine, and same for the employment and the matches.
Thank you very much.
Okay, thanks, Rushanara.